Morning, Pipsters. Ready to go? Let's go! That is royalty-free music, by the way. Why is that, Gary? Is there a decoupling? Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Also, Gary says, I'm going to step away from Swiss franc and only concentrate on USD and yen. Well, one of the pieces of advice I gave you a few weeks ago was going into the middle of August, the market will change, but not you. You should not change. So if you don't see good setups, don't take the trades. But the issue here is the worst case scenario is you change your behavior because you're... Yeah, sorry, I noticed there was a drop there. All kinds of technical problems going on today. That's why I was a little late. So everything had to be rebooted, and that still didn't work. So I had to reboot, and that didn't work, whatever. So yeah, I think there was a massive Windows update, so like nothing worked this morning. Once again, I'm late, but I've been at my desk for 45 minutes. I'm drinking coffee from yesterday. So yeah. So anyways. Okay. So thank you for your patience. By the way, my name is Wayne McDonald. I'm a currency trader. I'm also in my last day of being formally a full-time student at Harvard. My last day. Last night, I did a final exam. I don't know if I aced it, but I probably got an A-, which is, you know, that's average. Did really well. I was on, like, question number 7, and I'm like, I nailed all of these. Like, I formatted the charts beautifully. I made sure I answered the specific question. The answer to this question is, blah, blah, blah. Like, just beautiful work, right? Beautiful. And then almost didn't have enough time, though. But so anyways, I think I did fine. Now, I'm in this venture capital class, and the professor's also doing a private equity class. And many of the private equity students are in the venture capital class. And they're freaking out last night because private equity had their final. And they're like, it's so difficult, it's demoralizing. So this is my last day. My final is coming up this evening. And it probably is so convoluted and so difficult that it's demoralizing. So my last 2 hours, or sorry, the last 3 hours of my Harvard experience will be demoralizing. So anyways, but I got you. You give me the strength to get out of bed and do what needs to get done. So bring it on, brother. So, yeah, so it's all going to end with a bottle of Dom Perignon and tears. Yeah. You know, anyways, so, yeah, I'm cool, man. I'm cool. I'm done. Here's the thing, though. Here's the thing. If I get an A in this venture capital class, which I'm capable of doing, I have nearly 100% average for the class. But I've been in this situation before. As an A student, come out with a C after the final. I've seen these things before. It hasn't happened to, well, it sort of happened to me once, but it's happened to many of my friends a couple of times. It's just the professor, right? So anyways, if I get an A tonight, I graduate with my master's degree with honors, which is much more difficult than your undergrad, which I did graduate with honors, right? So if I can hit this, if I nail this tonight, I graduate with honors. If I don't, I miss it by like 0.1. Anyways. So, we'll move on.com. La la la, la 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 la. Error. Whoa, YouTube is... No, yeah, I'm having... YouTube's having trouble. I'm having trouble. What's going on? But thank you. Thank you. I appreciate your support. Okay, I don't know if this is even streaming. So I've rebooted everything multiple times, so I don't know what's going on. So let's just take a look around the world. I'll pretend you're here with me. Aussie still quite weak. Euro still quite weak. CAD still quite weak. Okay. Kiwi, meh. Okay, so anyways, this is risk off, risk off, risk off. And this is sort of, it was weak, then strong. So there's a little bit of mediocrity there. Very, very weak, and probably still weak, but somewhere in there. Swissy up, Swissy down, Swissy up, Swissy down. So right off the bat, you should see there's mostly stuff coming off the board. Mediocrity, mediocrity, and mediocrity in the funding currencies. And then pound is really strong. But we've known that because we've been buying that for a whole month. So, oh, right on, your customer. Let me know how you fix the situation. Let me know in case it happens again to somebody. So anyways, not great conditions, except Great British Pound is quite strong. So look into that. Let's do gold and silver. Do you know why? I noticed somebody asked about silver, so I'll do that. Because you're my sweet baby. Okay, oil, gas, oil. XAU, gold, XAG, silver. All right, there's your silver. Okay, unbelievably strong. Unbelievably strong. We're 2 standard deviations from a mean. In this scenario, we call this out of position. So let me be clear here. I am not telling you to sell this. I am telling you that take profit is coming. Profit taking is coming. Okay? Profit taking is coming. This, even my drawing tool isn't working this morning. Yeah, was there seriously a Microsoft update again? It seems like there was one not long ago. This one's really bad. It's really slowed things down. I guess they're spying on Google stuff probably. Anyways, okay, so this area here around 30, I would expect massive profit taking. So the way that works is it hits here and then it comes down. You could, because the trend is still bullish, you don't want to sell it, but you can scalp it down. And we call this stop hunting. Okay, and the reason it's stop hunting is smart money will get out in here. Why? Dude, that's what technical analysis tells you. If you have technical analysis and you ignore it, you're not very good. I mean, you have to have rules of engagement. However, there will be traders that are not very good. They'll get up there and they're like, what if this goes to 40, eh? Right? They won't have the discipline. And so what you'll do is force them out. So the smart ones have the discipline. They will get out. They made good money. Great. Okay, and this is what you would look for. Now, I don't know if this will happen, so I want to remind you how to be a trader. If or when we get to this area near $30, you need to zoom in and look for evidence of, let's say, a giant bearish engulfing candle, a couple of green candles, and then maybe get short. And if, right, and then maybe get short. And then get short, okay? All in this context. Now, what we don't know is, are we going to end down here? And I wouldn't think that. I wouldn't think that. The other one is, what if you come down into here? That would be more likely. Okay, but even a drop from 30 back down to 23, it's a pretty big move. I mean, what is that, 6 months worth of price action? Yeah. Okay. But I want you to remind yourself what's going on. Remember the fact that gold and silver is going up. It's meaningless if you don't understand why. Because if not, then it's magic. You're like, oh my God, it's magic. Why did it take off? Okay. Central banks have devalued currencies. I've given multiple examples of why and specifically how. I will remind you about my conversation about the Central Bank of India. They're devaluing their currency. How are they devaluing their currency? They're buying gold and silver. Cool. The United States is devaluing their currency too. So there's the demand side of this equation. Okay. Okay. Demand is downward sloping and supply is upward sloping. The demand side of the equation first is there's more demand by central banks around the world to buy gold and silver. So demand shifts to the right, D2. So the amount of demand, okay, demand increases for gold. It goes from a small number to a big number, okay? Now, the availability, aka the supply of this, then also diminishes because more people, right? More people are buying it. So there's less. And this side is price. So the first step of this equation is demand increases, okay? And then supply falls and price goes from equilibrium 1, this is the amount in dollars, from price 1, P1, to the second one, to P2, based on increase in demand, and then we run out of supply because everyone's buying up availability, and then you work your way to P3, and okay? And then on top of that, so this is just the silver side of the equation. While that's happening, and for exactly the same reason, the United States is devaluing their currency, which means now, just based on the purchasing power per dollar, right, the per unit of value, right, of the US dollar falls, which means if nothing changed for gold and silver, you would still, the price would go up because it's priced in dollar, and silver hasn't changed, but the purchasing power of the dollar is diminished, so just you need more dollars to buy gold, buy silver and gold, and okay, but also gold has gone up too, as I just showed you, because of an increase in demand, and then eventually the price on top of that goes up even further because of the lack of supply. And therefore you get these radical moves like, oh my God, we were at 13 and now we're at 30. It's doubled since May. Yeah, but so is Carnival Cruises. So is MGM. Okay. Just another consequence. But that's why I teach this to you, so that you know these things. No, these are not daily. You can see this goes back to May. So let's see. May pivots, June pivots, July pivots. Now we're in August. Okay? So this is OOP, out of position. Typically you hit a CT, which is a counter trend, and you get back to the CPP, the central pivot point, which is here. So I don't know if that's the future, but now you use technical analysis to confirm or deny your strategy. And your strategy would be assume profit taking at 29.50, and the possibility, not the certainty, the possibility of resetting back at the central pivot point. Okay? Only the possibility. It could fall further, or it could just roll reversal off of here around 25, 26. I don't know what the future is, but you would now use your technical analysis, right? And then inside of this, we're 2 standard deviations from the mean on this time frame. Okay, so spiking it up and coming back to the central gets us back to the mean, a reversion to the mean, a mean reversion. Okay. But you'll notice that the velocity is increased in recent times, which only makes this much more profit-taking than the slow, steady rise. Okay. Isn't that nice? You want to do gold next or Bitcoin? Gold? I mean, gold makes sense, right? Where's my coffee? Oh, it's in my hand. That's so good. Yeah, I got to get off the cycle, though. Coffee, 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 red wine, red wine, red wine, red wine, coffee, 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 red wine, red wine, red wine. Hey, I live a balanced lifestyle. On the left is coffee, on the right is red wine. Too tired to sleep, too tired to think. It's a difficult. I can't wait to only be a Forex trader again. Oh man, what a great, wonderful journey. Cool. Has anyone said that to me? No, I refute it though. Yeah, I'll tell you. Like, I'll give you an example. All right, so I'm not that dumb. I have a lot of experience though, and I learn by doing mostly, so I retain. I will tell you, so the question here is, am I a genius? Has anyone told me I'm a genius? I'll tell you why I'm not a genius. So again, I'll go back to this Harvard experience. I know half of you just rolled your eyes. Oh, God dang it, that's all he talks about. Well, I'm knee deep in it, so it's my life experience right now, so bear with me. So, I signed up for a class. This was a couple of years ago, and it's macroeconomics, right? Advanced macroeconomics taught by someone that works at the Boston Fed. So literally all he does during the day is Fed stuff. He goes and he feds, right? And then he came to Harvard and would teach macroeconomics. I'm like, oh my God, I have to have that. That's what I need. Okay? So I get there and it's full of Harvard College kids. And I'm like, oh man, I got 20 years of experience. I don't have any formal education in macroeconomics, but I should be pretty good. I should destroy these 20-year-olds because they don't know anything about global macroeconomics. They probably haven't even left the country. Long story short, it's a class just like this venture capital class where the exams are so difficult they're demoralizing. I'll give you an example. Right? The mean grade, the average grade during the midterm, it's worth 20% of your grade. The average grade for the midterm was 41%. Most people, the vast majority of the curve, failed the exam. Failed the exam. About 70% couldn't break the 50 mark. Demoralizing, right? And I'm one of those guys where I'm like, I got my ass whooped. Now, okay, I don't have a background on calculus. I should have known calculus a little bit better, but still, I should be able to get through that. Like, come on, I should be able to get beyond 50%, right? Like, oh my God, 20 years of experience, and I studied, and I learned the material. It was just, I'm not ready to work at the Fed, let's say, okay? Now, so the question is, has anyone told me I'm a genius? There were kids in that class that got 95 and 100%. They're geniuses. And I swear to you, I thought about this, like, why would the professor do something so complicated and difficult that it would demoralize a normal, smart person? I think they have a secret government agency that watches for these guys, where everyone fails, and it's like nothing to these children. They might be 22 years old, and they're like, this is nothing. You're not even challenging me. Those guys are the geniuses. But I'm pretty smart for a supermodel. So, right? So I'm pretty smart. I'm very good looking. But the best thing about me is my modesty. All right, let's go. Let's go. Let's go. If I said it, then a minute. Okay. Very similar, but much clearer lines here looking at this on a 4-hour. Brett also. I love waiting for that setup. I love waiting for that setup. It comes up all the time. You know, the best thing about me is my modesty. Just love it. Yeah, I'm pretty smart for a supermodel. All right. So, look, let's go psychologically. Nothing says down. I'm not telling you to sell this. I'm not saying it will fall. I'm trying to take past performance and predict future results, which we know from the daily disclaimer, it's not indicative of what will happen. It just might happen. And what I call that is strategy. So when you're planning for war, you don't know where you're going to meet your enemy usually, or how strong your enemy is, or what your enemy is going to do. Okay? So you don't know all these things, but you think, well, if I'm in that situation, I would do this. Or looking at the terrain, they will do that. Or based on what they've done before, they may try something similar again. And that's all it is. So that becomes a strategy. You have to have a strategy for these outcomes. Now, you might have 3 different strategies up here. Thank you, Maida. Thank you. Goes into the cigar fund. Hey, by the way, I've actually figured out how to withdraw that money now, so which is good, but I have to confirm and then confirm and then confirm and then confirm the account. I don't have time for that, but it's stockpiling. It's stockpiling. All right, but thank you. Maybe I'm going to buy, maybe you're buying a small piece of the Dom Perignon tonight, so very cool. Okay, so you might have multiple strategies up here, and you might want to think of them as if-then statements. If the enemy does this, I do that. If the enemy does this, I do that. If the enemy does this, you do that. Okay? You're not guessing. I want to really emphasize that. You're not guessing. You have to think of, I would say, normally at least plan A, plan B, but usually there's even a plan C, but you'll know plan C comes up because the first 2 have failed. So they're kind of, I don't know. You could just say, well, this is so far away, we don't have to worry about it. Okay, so then you get down to plan A and plan B. Now, I know I've taught you this over the last 10, 12, 15 years we've been hanging out together. Plan A and plan B. Okay? So we can, let me describe this one more time. Nothing on this chart says down. Everything on this chart says up. In fact, out of the swing trading course, you will know this is up and you know this is out. So all you're thinking about is up and out. Now, if you're up here, I would not buy it. If you're that slow, like you weren't on this on Sunday, then, dude, forget it. Just forget it. You don't know what's going on. You just don't worry about it. Let this one go. Okay? Buying now is ridiculously behind. Okay? So now you can buy a dip here. That would be all right. Okay? But that's you planning in the future, not reacting to the now. But going back to this, your one scenario is we do this or something to it. Like, I'm not saying specifically. What I'm saying is it goes higher. Okay? It goes higher. That is one possibility. It keeps going up because central banks keep buying silver. And therefore, price of silver goes up. And so other people are like, oh my God, someone's cornering the market on silver. Let's get in. Which has happened before, by the way. Two brothers actually tried to corner the market on silver many years ago. Right now, central banks are buying it up so they can devalue their currencies, aka Bank of India. So this trend continues. Now, we do have non-farm payrolls tomorrow, which might get in the way, but it may not change anything fundamentally. Like, for example, how ridiculous does non-farm payrolls have to be tomorrow for the Bank of India to stop buying gold and silver to value their own currency? Like, it's almost impossible that that's going to stop until market conditions change, not NFP. Okay, so that's one way of thinking about it. So if it does that, then buy it on the pullback. This is a breakout strategy. So if you observe a breakout strategy, use a breakout strategy, and you'll be long and gone. Maybe you'll buy it at 2100 after the break. So it goes to like 2150, and then you buy it back down at 21, and then you're long and strong, and it does one of these things. And just keeps going. Okay, cool. That might happen. It could happen, and that's that. We don't know if it will, but it could and it might. And if it does, you know what you do because you already have strategically thought about it. And I hope wrote down, printed out the charts and wrote it down and pasted it on your wall. Okay? Plan B. It doesn't do that. Investors take profit. What will you notice? You'll notice a sharp decline and a lower high and then a lower low and a lower high and a lower low and a lower high and a lower low and a lower high and a lower low, or something to that effect. At some point, because you already are planning for this possibility, you already have a strategy in place, and because of your genius, you're ready, willing, and able with your then statement. If you see this, then you will do that. And somewhere on this move, you get on the clue train. Which one's going to happen? Irrelevant. Who cares? You see what I mean? Is it going to go up or is it going to go down? Yeah. Yeah, the Hunt brothers. Yeah, that's right. The Hunt brothers tried to corner the market on silver. Okay. Have cash. So he is observe and write down take notes. Observe. And then usually at a critical moment in time, they put ammunition into the proper target. Okay. Okay. So there's gold and silver. Now we can do Bitcoin. Holy smokes! Yeah. 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 Okay. First of all, this is why you always trade in the direction of a trend. Cool. Oh, for sure, eh? Gee whiz, get out of the way. I gotta move. Give me the juice. Look how beautiful these setups are. Pretty sick, actually. Cool. Pretty sick. So very standard price action here. Up to the 21 and up, or up, right? Up, out, retrace, right? Higher, high, higher, low. Fibonacci retracement 382, roll reversal off the top. Nothing too complicated. Nothing too complicated. Right. So if we take a closer look at like the target now, you're like, which is very similar, is actually saying here. Not too dissimilar. Okay? And those are guesstimating the future. If you don't like that, what you do is you stay bullish. So strategy number 3, stay bullish as long as you're above this 21. Okay? Stay bullish until it's no longer bullish. Okay? 3 ways of handling that. And it looks like the last time there was a buy based on moving averages, and remember that's what I wrote my book about, how to use, much of it is how to separate price from market using things like oscillators and moving averages. So this is classic bull market beginnings. That's at 9,000. We're on our way to 12,000, and there still hasn't been anything to say stop. This was pretty gosh darn close, but this is an hourly chart. You can go to like a 4-hour chart, and you're still riding the 21. See this? Cool. So that's gold, silver, Bitcoin. I guess we'll take a quick look at WTI. Look, how are you going to treat this? Well, standard operating procedure here. Okay, this is your buy area. This is your exit area. Now, it's not a lot of money, but that happened perfectly. And if you believe this is bullish, remember, I've been saying I'm hoping for an increase in demand. And we talked about this quite a bit last week, so this is relevant this week. Okay? And so if you believe this is your sign, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 out, but that this is a meaningful change in trend, so to speak, then yeah, this would be your new op to buy, because once again, you're trying to ride the 21 up after a 21.55 cross. And not just a 21.55 cross, but one that occurred because of a bullish entry off the swing. Okay. Got it? Is what you're hoping for. If you're bullish on global macro, okay? If you're not bullish on global macro, you want that to sit around right 40. So let's do the pig. Let's do the Great British Pound. All right. Okay, let's zoom in here. This is the buy zone. Then we're on target now. Up, 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 down, down, buy. Kick off the 21 like it did here, and hopefully here. Okay. Bonnie, there's a link in the description below on a free video training course at youtube.com/fxbootcamp. It explains all the moving averages and many of the other tools that I use in great detail. I think there's 4 videos that are about 20 to 30 minutes each. That'll answer all your questions, okay, Bonnie? Yeah, oh, my pleasure. The link's in the description below. Yeah, it'll walk you through absolutely everything in wonderful, wonderful detail. Cool. Okay. And remember, guys, this means the market has turned bullish. Now, it doesn't tell you you should be bullish. It just tells you on this time frame, in this moment, aka momentum, it's currently technically bullish. Now, it's only meaningful in a scenario which you are A, you're already bullish, and B, you have a technical setup to confirm the bullishness should exist. Okay, so you're already thinking, as this is falling, you should be thinking, oh, right, I have plan A and plan B. Okay, so it's falling. You're like, yeah. Good, good, good. I'm a bull, so I want to buy it between 130 and 129. You already know all of this as it's falling. Okay, cool. And so now you're waiting for some sort of, setup. And you're like, okay, I love this bounce here. You could have traded that, by the way. And if you had traded this, your stop goes below the S, which is even below this. So you would be making money right now. All you had to do was buy it there on Monday. Right? Really? Yeah, dude. Seriously. It's so basic. Okay, good. So you bought that. Or maybe you're ultra conservative. And sure enough, you get the test. And you're like, okay, well, now, if it goes up here, I'm going to be bullish. If it makes another lower low, I'm going to expect a lower high. And then, so you might pass on this one. Really depends, because if it goes down, making a lower low, then it has this propensity. So before you could kind of get into that, you'd need sort of this behavior. So that changes everything. So you're paying attention. Then it makes a higher high, higher low, higher high, higher low, higher high, higher low. Okay, and what you're looking for in these situations, first of all, you got the confirmation of the 21.55 cross, which tells you to buy here, or buy here, so on and so forth. And you're like, well, Wayne, I need another tool to make it, even easier to see. And that's where in my book I say, okay, you expect this, you observe this, and because of your observation and your patience and discipline, you have a swing trade here, by the way. I call these swing trades. And then here's your actual tactical entry for essentially day trading or intraday trading. Okay? This is market. So if you're trading the market, you take it there. If you're trading price, you take it here. Okay? Now, usually what I teach you is you expect this coming. And so using my old language for 20 years ago, you'd cut the corner, which means you already anticipate the 2155 cross. So you would actually try to get long here off of this because of this. Because of this. I mean, there's a lot of nuances here once you're a more experienced trader, right? So you could actually take this 5-8 cross up, take your profit here, and then buy this 5-8 cross up again, and you will do that over and over and over again. And that's the basis of my book. Okay? That's the quick version of my book. That's just standard. What Wayne would have taught you 20 years ago is still extremely applicable to what's happening now. Nothing's actually changed. Okay? So I'm worried that you skip some of this stuff where you're like, Wayne tells me to buy at these pivots. Whoa, 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 whoa. No, 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 no. I tell you, create a bias. Okay? And from there, you can use technical analysis to confirm or deny your strategy. What is your strategy? Well, a swing trade, the most basic bullish swing trade you can possibly be given is buy here on Monday. So buy here, the price, and you're like, oh my God, it's a psychological level of 1.30000000. Every algorithm on the planet can see that. Right? Buying off a central pivot, buying off of a psychological level, you're already bullish. But you're like, well, I need to see a double bottom. Okay, there you go. And then I need to see a higher high, higher low. Okay, you got that one. And then I need to see a higher high and higher low. And then now you got that one. And I need to see a higher high, higher low. And you're like, yeah, okay, that'll happen between today and tomorrow. But you have to be able to think in front of the target, guys. You have to already be ready, willing, and able on Monday to be buying this. Or ready, willing, and able on Tuesday to be buying this at the London Open. Right? Or catching the Asian fade, or catch the Asian fade, or tomorrow catch the Asian fade. Right? Up for London close, fizzle down to Asia Open, gone again. Okay? Cool, right? Thank you, JK Ministry. I can get all the good... I need all the good karma I can get. Oh, look at this one. This is great. So we just talked about OOP on what? Silver? Check this out. Beautiful. Okay, we start the month OOP. We hit the exit for the CT. And the projected bottom off this counter trend is the CPP. You guys remember me saying all this like a half an hour ago? Oh, schnicker. It's out of position, hitting the target, retracing, and stopping. Holy schnicker. Oh, for sure, eh? Holy gee whiz. Ha ha ha! Oh, wee wee! Don't you I almost went Linkin Park on you. Yeah, anyways. Oh my God, that's textbook. Nice! Cool. Now, if you really like this, okay, what the technical analysis is telling you, this has a potential of going to 1.22. We're not even at 1.2 yet. So there's about 250 more to go. You should be long at 119, targeting 122. Thank you, Batman. I appreciate that. Real men don't scream like that. All right. Very nice. Ooh la la. So that kind of interesting. So pound doing good here. This is a bit of a battle. And I'll show you this one. This is kind of interesting. A bit convoluted. But it's also out of position. And by the way, when I say out of position, only for a bull. Okay? So bull, by definition, and straight out of the training course, a bull is buying here. And you would have known it a day and a half earlier. So bulls are still doing exactly what a bull would do in this situation. Absolutely clear as day. Okay? This is what a bull is attempting to do. Now, in their way, because I said it's only out of position for a bull. Okay? For a bear, they want to sell here. So that's why there was quite a bit of a battle. There are bears here, which is interesting. So a bear now, because of this breach, really needs to take a break. And what you need to see as a bear now is at least back to this neckline. Okay? And if you get that retracement back to the neckline, then you're thinking this next week. Okay? So really, I think you're not going to get a trade until next week. But Sunday, you might be shorting this at what is it? I can't even see it anymore. 197? No, 198? Yeah, it'd be great if you can get short at 198 on Monday. I know it's only Thursday, but Thursday's dead to me already. Okay? And tomorrow, non-farm payrolls, it's just it's a blip in the matrix. It's in the way. It's a singularity. If you're in a spaceship and you're like, hey, look, everybody, a black hole. You just steer clear of it and you'll be fine, right? And so I just steer clear of the singularity and the price-time continuum and take this down maybe Monday or even Sunday. Alejandro wants to know about the 10 a.m. options cut. I don't know. But I'm the world's greatest real money options trader, and I have a jet. I just have to fly all over the place because I'm an options trader. I need a jet because I'm always traveling because... Actually, I don't know why I have a jet, but I have a jet! Real money options trader! It's the 10 a.m. options cut. I mean, maybe I'm the only one that gets the ads, but I laugh at it all the time. It's pretty funny. So pound, same thing. It's all the same. I feel like I've already done that one. And I've already done that one. I've already done that one. Oh my God, they're all the same. All right, so if you're a bear, I'd probably be looking to set this up as a double top of a double top, but whatever. It seems like we talked about this yesterday and the day before. So you got two things that are likely to happen. Create a plan A and plan B. Plan A is up. Okay. And plan B is probably down. Or strategy A, strategy B, not plan A. Strategy 1, strategy 2. And now you use technical analysis to confirm which one's happening and then carry out your strategy in that case. Brinsley, the answer is yes. I don't usually, but I often place next week's trades on a Thursday. That's why the live swing trading group gets together on Thursdays to plan next week, because next week might be happening today. Okay? The 1 minute news scalps, they don't exist anymore. That's why I don't do them. There's just not that. We don't live in that kind of world anymore. There's nothing surprising anymore. So yeah, 1 minute. I actually do miss the 1 minute news scalps too. But it's been a long time since I've made like 300 pips in, 10 minutes. Okay? So it's not even something I care about anymore. Yeah, I'll remind you guys, I used to in the last 5 minutes of oil trading, okay, so even that's changed now, right? But it was around, I think pigs and cows closed at 2 and oil closed at 2:30. So I'd log in, I think it was around 2:15. I'd set up my trades, I'd set up my strategies, and by 2:20, let's say, I would look to pull the trigger, and let's say I was short oil at 225, and between the time of 225 and 230, I might be up $2 profit on oil. And then I would hit exit. I'd actually say out. And in the time it took to close my trade, I might have $0. I might have $1. I might have $5. Well, not $5, but let's say $3. Just by the time I clicked out, price would do this. And you just never knew the price you'd get. Now, it doesn't move $2 a day. You're lucky to have a $2 day. I used to have $2 minutes. So, when you're like, hey, I'm a scalper. Hey, look at me. I got a YouTube channel. I drive a yellow Lamborghini. I'm only 22 years old and I scalp on my cell phone and I'm so rich and successful. I'm like, son, you don't even know what you're talking about. Like, you're selling an old dream that used to exist 15 years ago, but that don't exist anymore, unless, of course, you leverage up and you're like, I only have $500, but I'm going to jack up my lot size, trade the whole thing on one trade. Yeah, have fun. Have fun. Have fun, buddy. So you want to be a man? You grow your account size with low risk over long periods of time and take care of your family before you buy a Lamborghini. So you're saving for retirement? Yeah? You got 6 months in cash just in case things go bad? Oh, you don't? You live in a nice house in a nice neighborhood where you can raise kids? You got a college savings fund? Oh, you don't have any of that? You're a boy. Good luck with that. Why don't you get nicer wheels on your car? That's a good investment. Oh man, you should wrap that. You should wrap your Lambo. That's a good use of your money. How big are your subwoofers? Yeah. No. How big is your retirement account? How much equity do you have in your home, son, boy, right? So anyways, that's what I see in those things. It's childish dreams. But you want to build a business? You want to build a legacy? Now we're talking. That's what adults think about. Let's build a legacy together. Let's buy some assets. Let's grow our net worth. Yeah. I have a jet! But it's true, right? I mean, come on. It's amazing. If you fall for that, let's say it's easy to fall for that. Unfortunately, it's when people become desperate that suddenly somewhere it's believed, but it makes no logical sense. Right? That's the point. If you can bust out a pro forma cash flow statement that shows me that it's correct, then please do. But I know it doesn't exist. If you just took the time to do the math, you'll say, oh, that doesn't work. But I'll tell you what will work, and this is good about having a finance degree. I can show you the guaranteed, so to speak, guaranteed, as close to a guarantee as possible, of where you'll be in 5 and 10 years if you remove some of your risk and instead of focus on getting rich, you focused on modest, logical, consistent returns with as very little risk as possible. And if you just grow it over time, you will guarantee more than enough. More than enough. But you have to do it over long periods of time with low volatility, not up 22% one month, down 16% the next. And then if you can do low volatility and consistent returns over long periods of time, you will have an attractive, you will have a skill, first of all, a marketable skill, and people will be attracted to your results and they'll say, well, can you do that for me? And you'll leverage up not by having a larger lot size relative to your account, you'll leverage up because you have more assets under management. Right? Then maybe you can get a jet. Look at me, I have a jet! Okay. Tired, man. Tired. Oh, you know what we should probably do is go back to that natty. Go back to the natty. I skipped over it. I forgot we did that other thing that other day. Oh, yeah. Okay, so we were here. Are these dailies? Hang on. Let me check it. Weeklies. Where were we? Do I have to back out even farther? Maybe it was a daily. Where was it? Oh, I know. I think we had it this way. This was, what, 1 or 2 days ago. Somebody put in a super chat for like 10 euros. And they're like, Wayne, should I sell nat gas? Do you guys remember this conversation? I broke it down really very specifically. We were at 2. He's like, should we sell this? And I said, well, I understand why you might be thinking it. And I understand your logic. But let's break it down in a way that we can reduce your risk. Okay. How do I recognize something is good for the economy but bad for the currency? First of all, I don't believe there is anything good or bad, but I see what you're saying, strength or weakness, right? That is central banking and macroeconomics. If you need to know that stuff, you need to join FX Bootcamp right now, fxbootcamp.com. I'll fix you. You just need knowledge. Okay? But it's quite straightforward, let's say, if you know. Okay? All right, so anyways, going back to this, someone paid 10 euros for me to answer this question, so I put some time into it. And what I said is, well, first you have to observe, right? And then we talked about various price action off the moving averages, and we talked about heading to the bottom, maybe, if that were to the case. But the focus was how to use things like an oscillator, right? You guys remember using the stochastics, and I explained the math of stochastics. Yeah, his 10 euros saved him money. And that's how you do it, guys. That's why I said if you just sold at 2 because it's at resistance, you're guessing. Okay? If you sell at things, then you're a degenerate gambler. If you sell because this is an M3, you are a degenerate gambler. If you buy this because it's an M2, you're a degenerate gambler. Okay? There's more to it than that. But it's an okay beginning, but now you use scientific methodology to confirm or deny your hypotheses. And if you can do that, then you're a beast. Okay? I'm the prophet of profit! That's my magic right there. That's my magic. Oh, that's my magic. Or it's just sitting here for 20 years. Yeah. What's an M2? Okay, you need to learn pivot points. Once again, in the description below the video, there's a link to a free training course on youtube.com/fxbootcamp. It's 4 20-minute videos. I think they might cover pivot points, or they may not. I've done about 5,000 videos on YouTube. 5,000, I'm not joking. There's approximately 5,000 videos associated with my work on YouTube, and most of them are somewhere between 90 minutes and 2 hours. Let's say on average 90 minutes. Feel free to go through there, and I'm sure if you watch all 5,000, you will understand pivot points to a T for free. Now, if you got 400 bucks, you can join FX Bootcamp and watch 35 hours of videos instead of 5,000 hours, and you'll get there much faster. But it'll cost you 382 bucks. 382 bucks! Yeah, so there you go. There's multiple ways to get it. Or, oh, you know what? You can buy my book. I think it's 50 bucks. So you got the free way, you got the $50 way, you got the $400 way. Yeah, free, 50 or 400. Solve all your problems right then and there. Thank you, Batman. Luckily, when I do it, it's not loud. Wayne, I'm a third-year econ student. Yeah, what macro textbooks would you recommend? Well, macroeconomic textbook. I don't think I've ever read one. But, you know, most of the textbooks are written by Harvard professors. Let's see if I actually have one. don't know. Actually, I don't know. I found one textbook. So guys, books like this cost more than the entire video training course at FX Bootcamp. Just one textbook in one class, right? The current class or the one class I finished yesterday, there's the 3 textbooks. Cost me over $1,000 for the textbooks. And by the way, Harvard does charge me for the class too. So, so anyways, the only book I see that's specifically on econ is this sucker. But I don't, it's from my undergrad. You know what it is? Yeah, this one's pretty good. Yeah, I do remember this one. But this is econ specifically, but I'm sure there's some good macro. So like basic stuff, right? Like your 3rd year, you can do the factors of production, right? If I said throw out a Gordon growth model, you'd have no problem. If I said, can you do CAP-M calculations? Right? Capital asset pricing model stuff. But as far as macro, there's some pretty neat stuff. I don't remember what class this was for. Obviously an econ class, but I took a lot of them. Long run economic growth. What else is in there? Aggregate expenditure and output. Lots of charts. Boy, I can draw charts like nobody's business. I'm trying to see. Money, banks, Federal Reserve. That's boring, easy stuff. Yeah, it's a good textbook, I can tell you that. Okay, so, but is it macro? I don't see. Oh, here we go. Way at the end. Macroeconomics in an open economy. I hate this stuff. Macroeconomics in a closed economy. Macro in a partially... Oh, I hate stuff like that. And then there's like sub-chapters on exchange rate regimes and stuff. No, this wouldn't be a challenge for you. The international financial system. And the problem is, I haven't come across a good one that I agree with as far as macroeconomic forces, you know, the flow of money around the world. Like even any sort of macro reading I've done for class, they don't even differentiate, you know, reserve currency versus non-reserve currency, stuff like that. A lot of the data is written by really old white men, so they talk about, you know, they'll spend a whole chapter on M1, M2, M3, and you're like, dude, nobody cares about that anymore, right? So I don't know. Yeah, so the answer is I don't actually have one. A good macroeconomic textbook. Yeah, sorry. Sucks, right? Sorry, man. So the real macroeconomic stuff I taught myself. That maybe I sold it back. I don't know. Like I did take an advanced macroeconomics class. I don't remember the textbook though. He may not have even had one. I mean, I don't know. Sorry, dude. Cool. All right. Ba-ba-da-ba-ba. Peter says macro textbooks won't help your trading that much. Not the actual trading, but it'll help you strategically, but it'll also help you raise money. Because you can show people your history And you can say, well, look at my Sharpe ratio, and oh, the ketosis. My risk of ruin is blah, 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 blah. And for most people, they woo. Like, especially your early investors, right? They're like, I don't know what that means. So they kind of get lost in the mumbo jumbo. So inevitably, they invest into you because you need to speak to them in their own language, and they say, oh my God, this person's smart. They know money. So like a lot of my friends and stuff, they will talk to me not based out of sort of returns, but out of like, why do things work the way they work? And we'll have conversations like, they'll say, oh, the markets are going crazy. Should I get out? And I'm like, whoa, 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 whoa. Let's talk about why it's happening, why it occurred now, and what I've seen happen in the past, and the logic behind that continuing again. And you break it down, and that's where you earn your respect, even more than the trade history, right? So that's how I see it coming in, Peter, where you're like, okay, here's my track record. You got that. That's for your analysis. But you have to earn their loyalty and respect. And the numbers don't really do it. And in fact, you got to be careful of someone that only invests into you because of your numbers. It's often a bad experience because they don't give a crap about you, and which means they'll betray you, right? They have to love and respect you as a human being first, then as an expert in your domain second, and then, of course, the numbers. The numbers just... Okay, look, I'm a currency trader. Here's the last 5 years of results. Now let's talk. Okay? Yeah, Peter, so Michigan, I mean, again, anything written by a Harvard professor. Okay? Right? So yeah, there you go. I thought I had his stuff. Hubbard and O'Brien. I must have some. I might have just thrown a lot of this away. Oh, my God. Yeah, sorry. I'll tell you, like, my education experience over the last 5 years is very holistic. So obviously I took a lot of economics classes, both micro, macro, advanced. But I also studied all the economic philosophers of the Western world, going back, hundreds and hundreds of years. I studied Islamic finance. I did, statistical analysis, and some even statistical programming and such too. Really kind of pulled it all apart. But I had this luxury of already had 20 years of experience, right? And then, of course, spent a lot of time on the finance side. So when you put all of that together, and someone says, "Oh, well, my venture firm has an internal rate of return of 22%." You're like, "Oh, you're an IRR guy? Like, you don't." And the difference between an absolute fund and one that's not, and they have to hide the fact that they have lousy returns through their IRR, right? Stuff like that, where you need to understand how different cultures and different structures and different investors approach this stuff, right? So I do want to create a course for you guys where we go through all the different types of alternative investing, and we can say, well, how do they make their money? How do they report their money? How do they structure relationships with their investors? Like, for example, how would you like to go through line by line a term sheet with a hedge fund, a term sheet for real estate investing, a term sheet for a venture capital fund, right? And know the intricate differences, right? And how they can be very similar, but also how they can be different. Because then what will happen is you're going to be able to sit down and talk with a potential investor, and they've been in other investments before, and they might even be discussing the current investment with other structures, and you will be able to actually educate them on the whole process. But these textbooks at that level, they take out everything beautiful about macroeconomics and all the stuff we love about trading and investing. They strip it all out through their, their weird analysis through calculations and stuff, and make it very esoteric. And there's no love or beauty in it anymore. So I just said, you know what? I know enough. And then I can apply all this in the beautiful market of Forex. Truly, it's still truly fun and beautiful for me. Going any farther, you're now a computer, and it's ugly and cold. So that's why I walked away from that. Cool. All right, let's do 3 requests, and then we'll call it a day. Rookie Trader asks a good question, and that is, can people invest into Forex? Is it for trading only? It's fantastic for investing. It's absolutely fantastic for investing. You're mark to market, you're completely liquid, and you earn income as well as asset appreciation. But you earn your income every day, not every quarter. It's an absolute blessing. And by the way, Rookie Trader, when you become a large fund, if you had $1 billion under management, you'd be much more an investor trading on macroeconomic trends and business cycles and central banking policy than you would be scalping the news. And you'll see at that level, time becomes irrelevant, and policy is everything. You'll be in trades for months and years. You'll know when to cull the herd, so to speak, at times, but it's much, it's like, I would like buy in May and go away, not kind of thing, versus grinding hours and hours daily. So peso, okay. I guess we'll end on peso. Maybe ZAR, but we looked at ZAR a couple of days ago. It looks horrible. So let me break this, move this around. Okay, peso. We are supposed to be short peso, and we're supposed to, well, let's just leave it at that. We need to be short this pair. I got to change this once and for all. I know I've seen this 1,000 times. I'm not sure why it's that way. Okay, we solved that. 4 hour, 4 hour. This should be, let's make this daily. In fact, we can do it this way. Monthly. No, I'm fine with that. I don't want to mess around. Daily. I'm going to put this I like this even smaller, 14. Well, I'll do this 15. I'll do that 1. All right, so all we know on this is we want to get short. Okay. And it went too high. This come down. This is sort of like a weird second chance selling off of an R2. It's not a good setup. Okay. Here's the out of position move for bears. There's the target. There's the counter trend. And then we're into this monthly, but the monthly went to R, so that puts us on an inside month to S. And now we're in the middle of the range, kicking off, using what? Weekly R2s as selling entries, not buying exits. It's a really convoluted setup. Could you be trading this? Yeah. So I think if you were going to trade this as a bear, like you're watching this every day kind of thing, which to me, this is a flow trade for me, not a technical trade. So I don't trade it throughout the month, but if you were trading it every day, you might want to look for something like this. But the problem is we got non-farm payrolls tomorrow, and that is a singularity in the price time continuum. So it's hard for me to tell you what's going to happen tomorrow. It's all gobbledygook. So now you have to set this up for next week. And there's a lot of ifs in that. So like, this is too high for me to be a bear. I get this, but it's for the wrong reasons. And then tomorrow we got this event risk. So, and then next week, I don't know. It's just gobbledygook. I mean, I can see there are things there, but I'm worried that I see things that I want to see. And I don't want to get short that and lose money. I get it macro-wise. It's just, it's not happening now. It's the worst. And I've been preparing you this preparing you about this or for this for a very long time. And that this is the next 3 weeks are the worst 3 weeks of the entire year for trading. So you're like, well, you got this gobbledygook mediocre setup at the wrong time of the month, selling off pivots, but for the wrong reason. Should I be trading this? I'm like, you know what? Probably not. No. These are the 3 worst weeks of the year for you to be doing anything, but to do things that are unusual, it's even worse. Okay? Okay? Yeah. Look for better days. Wait for better days. Keep your powder dry. And we had a Rand one, and we can look at that. But again, we covered this not long ago. And of course, nothing's changed. So once this breach happened, it's dead to me. It'll probably be dead to me for the rest of August. Like maybe, just maybe, you get some Rand strength again at the end of August. Typically maybe like a third week of August. But we're a good 3 weeks away. Like I look at this and I want this to go down. And it ain't going down. It might continue down one day, but I'm not interested. I'm just... Again, this is the worst time of year for you guys to be aggressive, to say, well, it can't go up any farther. Heck yeah, it can. So I will wait for it to fall. It's rising, so I'm not interested. And I'm not interested in today or tomorrow. Now you'll say, well, Wayne, this looks like it could potentially be bearish tomorrow. Up and then down tomorrow. Okay, if that's the case, maybe I'll pick it up on Sunday. Like, I don't have to be first in on this. I don't have anything to prove. Being first in on this makes me aggressive and alone and risky. But there's no glory. Like an investor wouldn't see that. Okay? Like, oh my God, that was such a crazy good entry. Nobody cares about crazy good entries. That's not what they see. They see risk-adjusted returns. So in that case, if tomorrow does create a giant red candle, and if I was a scalper, that's what I'd be looking for right now if I was a scalper. But as far as being a trader and investor, if it does that on Friday, I'll pick it up on Sunday, Monday. Don't worry about it. Okay? I'll pick it up casually. So like this projects down. So we got down, but it took 2 weeks for it to actually fall. So you're like, yeah, I get it. Okay? Now, if you were a scalper and you were trying to catch that, then the process you're in now is probably there's a plan B. Your plan A is much more like this. And then you look for midpoint psych levels, or you look for daily pivots. So you could even do that. You can go down to, where is it? Day trading bearish. Because you see the bearish setup. So you see that and you take it there and you're like, oh my God, it's already highlighted. I know, right? So looks like I'll have it come up to 1760. And if I see any vulnerability on a 5-minute chart, I scalp it short and I make money tomorrow, today or tomorrow. It's not a big deal. But see, that's aggressive because now you're looking to sell in something that is currently very much a bullish market. But this may predict down for a day or two, or even just for a few hours. In that case, if you're a scalper, you can try because your hunting stops. What if you take it as a range? It's still not an entry. So unless you're scalping, there's nothing really to do. Okay? Now, always put yourself in a mindset of where if you had so much money, what would you do if you had so much money? Well, you wouldn't be scalping USD ZAR in the first week of August, the day before non-farm payrolls, and selling it in an uptrend. Like, you just wouldn't do it. It's retarded. It's just insane. It's insane to take all of that and say, all of it. It's the worst time of year. It's the wrong direction. You're betting against something, against the day before an event risk, and you want to throw down big money. It's like, are you mentally deranged? Like, what's wrong with you? Or you're like, oh, I forgot about NFP tomorrow. Well, then you got a major problem. Or, Wayne, I forgot that based on seasonality, this is a really low performance couple of weeks. Well, why did you forget that? Right? You see, like, take yourself out of today. Today is dead. Today is irrelevant. You're planning tomorrow. You're planning next week. You're planning next month. You're planning the rest of the year. Put it all into context, and you're like, you know what? Thursday, the 6th of August, is not going to be a day where I lose a lot of money. Because it's not a great day to make a lot of money. Okay? But if you want to play around with, precious metals and stuff, by all means. Okay? If you want to like scalp Bitcoin and see if you can make $1,000 today, by all means, right? If you want to scalp USD Rand, fine. But remember, you're responding or reacting to current market conditions. I would also like you to have a long-term fundamental outlook based on some sort of economic analysis. Because if you can do that, you will get better returns in the sense of lower volatility, more consistent returns. Not just the returns, but how you trade. So if someone actually knows about Forex trading and they're thinking about becoming a client, they look at all your trades and say, oh, you're bullish on global macro. I see that. Now, why are you bullish on global macro? You could say, oh, well, that's a really good question. Let me answer it in 3 different ways. Now you're earning loyalty and respect. Okay? Okay? Question, what can I do and where can I go if I know all that math stuff, like Black-Scholes, options, calculus, Martindale's? I don't understand your question. What can I do and where can I go now? Well, get your track record of success. What should be my track record to get to be a quant at a hedge fund, for example? Start quanting and show that you're amazing over changing market conditions, such as what is likely to happen over the next 3 to 5 years. Okay. So, Alex, I am meeting with my live trading group next week, and I'm going to announce something pretty ridiculously amazing. And maybe that's the place you need to go and do the things that need to do so that you can work in a hedge fund. Wink, wink, nudge, nudge. I'm not telling you now, but you need to be part of that group. All right. Peace on earth, may the pips be with you, may your profits be above average. I have to prepare to take a demoralizing examination in which people are freaking out. Just happens to be my last examination, and then I'm a master of disaster. Thank you for being in my life. You give me the strength to get out of bed and do what needs to get done, even if you haven't slept in hours and days and weeks even. But thank you for being in my life. You're good people, and we do good things. I appreciate you. I like working with you. I know how hard it is. I've seen so many of you become quite good traders, and it feels good. Like I have pride for your success. It makes me feel good and humbled and honored. So thank you for being in my life. Yes, tomorrow at 7:30 in the morning, I might still be drunk on Dom Perignon. I'm not sure. But tomorrow at 7:30 in the morning, I will be at FX Street. Not at... I said, you know what? I don't like doing it on YouTube anymore. So I will be at fxstreet.com. So you can register there. And it's a 3-hour webinar where we cover non-farm payrolls live. So don't look for me on YouTube tomorrow. Okay? Cave says every crisis has a Harvard man in the center of it. You need to add one more to that. Right? Don't let a good crisis go to waste. Find a way to make money. See you tomorrow.